Swing Edge Pro, the intelligence feed for decisive traders.
All right, welcome to The Explainer. We're zeroing in on a single high-potential target today, a very well-known brand that is showing all the signs of a major technical reversal. Let's break down the data. Our focus is, of course, Birkenstock. And this isn't some flash-in-the-pan company. It was founded way back in 1774. This is a legacy brand, and right now it's sitting at a really critical inflection point. Now for the most important part, the edge detection phase. We're going to break down the specific data points that make this stock a prime target right now. So the first signal on the radar is its location. The stock is currently trading just 5.5% above its 52-week low. For any swing trader, you know that getting in near a solid established price floor is absolutely crucial for managing your risk. And here it is. This is the technical rock this whole thesis is built on, a triple bottom pattern. Basically, the market has tried to push this thing lower 3 separate times and failed. That's a huge sign that buyers are digging in their heels right at this level, refusing to let it drop further. Now, this is where it gets really, really interesting. Take a look at the ownership structure. Institutional ownership is at a staggering 104.87%. And no, that is not a typo. It means there are massive positions here, and that includes borrowed shares, which just screams conviction from the big money players. And when you pair that with insider ownership sitting at over 14%, what you get is this incredibly powerful alignment. You've got the huge funds, your Vanguards, your BlackRocks, and the company's own management all on the same side of the trade. And here's the kicker, the potential rocket fuel for this whole setup. Short interest is nearly 16% of the float. That is a ton of bets against the stock, which, as you know, is the perfect ingredient for a massive short squeeze if we get any kind of positive catalyst. So, let's run the scorecard here. Our 9-point criteria assessment shows that BIRK hits 6 of our 9 key metrics. Now, it's not perfect. Revenue growth has been a little sluggish, but the technical signals and the market sentiment, man, those are the primary drivers here, and they are flashing bright green. Okay, so we've detected the edge. Now let's talk execution. We're going to look at the forward-looking data and the specific events that could light the fuse here. Wall Street is overwhelmingly bullish. You're looking at 16 buy ratings versus just 3 holds. That kind of strong professional consensus really supports the bullish technical setup we've been talking about. And analysts are backing it up with a consensus price target that implies a potential 55% upside from where the stock's trading today. That's the kind of reward the street is pricing in if this thesis plays out. The options market is telling us to brace for impact. It's pricing in a move of over 10% after the next earnings report. And just to put that into perspective, that is way higher than its historical average. Traders are expecting some serious fireworks. And digging into that options activity, there's a clear bullish bias. With a put-to-call ratio of 0.65, that means there's a lot more money betting on the stock to rise than to fall. Traders are definitely positioning for a recovery rally. So what could actually drive this move? Well, we've got 4 key catalysts to watch. Strong growth in the Asia-Pacific market, a smart diversification into closed-toe shoes, a big $200 million share buyback program, and improving margins from their pivot to direct-to-consumer sales. All right, let's bring it all home for our final phase, the session close. Time to consolidate the intelligence into a final verdict. So to summarize, the strategic edge in BIRK really comes down to 3 things. A very strong technical support level thanks to that triple bottom, overwhelming institutional dominance, and of course, that high short squeeze potential. The things you got to watch for are any acceleration in revenue growth or an upside surprise on earnings. And the primary trigger for this whole setup is right around the corner, the next earnings report, scheduled for February 12th. That's the main event the entire market is watching. Which brings us to the final question. The technical floor is there. The institutions are all in, and the shorts are trapped. With earnings imminent, will the squeeze finally trigger? That's the edge. Briefing complete.
Swing Edge Pro, the intelligence feed for decisive traders.